Before we get into it, anything I show you is not meant to be me telling you what to do when you're picking a stock. It's me giving you my opinions on how I process the information on my own. So I'm not your financial advisor. I've been investing myself for 2 years, so that's my experience, and I'm basically giving you the information that has helped me on my journey. So it's coming from a personal point of view. Okay, now that we have that out of the way, I'll show you quickly how I make use of Yahoo Finance and maybe some other resources as well to find the information I need about certain stocks. So after you get an idea about a stock that you want to invest in, again, I've spoken about this before, but you break down in your mind the quality of this company. So that's what we're basically trying to figure out using the information that we have available to us. So in this example, I'll use 2 companies as your examples, one being Starbucks and another being Apple. So this, again, this is not me telling you to buy these companies. I'm just using them as examples. Okay, so let's take a look. So I've logged into Yahoo Finance. This is personally my favorite tool to use because it gives you all the information. It's all available for free. It gives you most of the information, that is, and it's all for free. You can pay additional to get additional functionality, but at the general basis of it, we just take you to that one. So I can search for the ticker symbol of the company, or the name. So in this case, I'll look for Starbucks. Okay, so if you notice, when I search for Starbucks, you'll see a few different options for Starbucks. And that's because they're in different markets. You can buy these companies in different markets. It's important to pay attention to the ticker symbol, and what the ticker symbol refers to is the short code of that company. So in this case, you can see SBUX as their ticker symbol. Now, ticker symbol has a historical meaning, which I won't get into because I do plan to do videos in the future to cover these ideas. So it's an equity and it lists what market they're on. So you can see that. So I know I want SBUX, Starbucks Corporation. I'll choose that one. It's important to pay attention to the exchange that it's on. So it's NASDAQ, and it gives you a real-time price, and the current price is in US dollars. So important to pay attention to those things. You want to know what exchange it's on, if you have the right ticker symbol or the right company, and what currency it's in. Then on to price. Does price matter that much? Price on its own does not have much meaning. Now, what I mean by this is you can have 2 companies that are very different, or they might be the same, operating in the same space, and one has a lower price and another has a higher price. What's actually important is the entire market capitalization of that company, or the perceived value of that company. This might be based on what customers view the value to be, or what the markets view the value of the company should be. So here you can see in the summary, you do get the chart and all this. You get statistics, you get conversations on the particular company, you get historical data, you get some profiles, financials, analysis, etc. So just taking a brief look, I do not pay much attention to charts because for me personally, it does not give me the information I really and truly need for investing in these companies in the long term. So I'm trying to pick, as an investor, I'm trying to pick quality companies that I can buy and hold for the long term. I'm not looking for the capital gains to be paid out now, and that's not my objective. Okay, so two things you might want to pay attention to when you're investing in your first stock is the ways you would actually get paid really in the future, at a future date. You can get paid in dividends. Not every company pays a dividend. Growth stocks tend to not pay a dividend because they want to reinvest that money into the company, into the business, so that it can continue to grow. Now, more well-established companies, some of them who've achieved profitability tend to pay out a dividend. And if you're looking for, some pay weekly, some pay monthly, some pay fortnight, or some pay annually. So it's up to you to find that information if that's what you're looking for. I don't focus too much on dividend. I mostly invest for growth in the future. Okay, so we take a look at that. I've mentioned market cap before. So Starbucks has a market capitalization of 121 billion. And how do they come up with the market capitalization? So market capitalization is made up of the amount of available shares that company has multiplied by the current market price. So it would be $103.37 multiplied by whatever the number of available shares would be. So if you worked in reverse and you divide the 103.37 by the market cap, then you'd get the number of shares available. Looking there, you can see some information about the previous close price, the open price, the bid price, the asking price, etc. Don't want to go too much into that, but they're basically self-explanatory, which is why I won't go into it. Now, they have some more complicated metrics, such as price to earnings ratio, EPS. They do have some more terms as well, which we probably come across, but when you do come across these terms, it would be a good idea to check on a site like Investopedia, or just do a quick Google to find this information that you need, because that will help you to be able to process the information as the time goes by and you get more comfortable as an investor. But because we're all starting and we just want to get to the information as quickly as possible. Okay, so I'm interested in Starbucks. Let me check the statistics, because I know that's what's really going to help me to make the decisions on the company, how good a quality the company actually is. So you can see in the valuation measures, you do get market cap, enterprise value. So the difference between the enterprise value and the market cap are things that you do need to be aware of. But briefly put, I did explain what the market cap is. And as a better measure, some analysts find the enterprise value to be a much better metric to be able to determine the valuation of the company. So please do go to Investopedia and find out the difference between these terms. I won't get into it here. Trailing price to earnings and the forward price to earnings, it would be a good idea to find out what the price to earnings ratio is. I'll try to cover in later videos a breakdown of these things and how you can use them to help you. But as a quick guide, I found that most of the quality investments that I do have, they do tend to, in the UK markets, I've found in a range of 8 and 20 to be slightly better value than those that are at a higher price to earnings ratio, at least when I was starting out. Now, this will differ when you start looking at growth stocks. You'd see a ridiculously high price to earnings ratio. And for a growth company that you believe is going to grow in the future, you just cannot use these old metrics in order to determine whether that company is a quality buy or not. You'd need to look into some other things, which I'll probably cover later in the video. EBITDA, it would be good to understand those things as well. The financial highlights is what we really need to be looking at. The profitability is important. So you can see Starbucks has achieved a 2.87% profitability, and the operating margin is 5.83%. Return on their assets is 2.93%. Their revenue is 23 billion, so that means so far They brought in 23.17 billion. You can see their revenue per share. You can see if they have gross profit, and they do, which is 5.14 billion. And the total amount of cash they have on their balance sheet is 5.26 billion. So always handy to check the amount of cash a company has versus its debt. Why is it important to understand this? This can actually help you to see if the company you're trying to buy into or trying to make a decision on, to see if it's healthy on the side of the balance sheet. Because if you're buying a company that's heavily indebted, that might mean that they're not able to pay off their debts going into the future. And what happens when you're unable to pay your debts is that you keep getting the debtors knocking on your door, and that affects your ability to manage the business in an efficient way. You can see the cash flow statement as well, the amount of operating cash flow they have, or levered free cash flow. I won't get into those metrics, but you can find out what they are. The whole idea is to be able to do the research on your own, to understand as much as you can, when you can. Stock price history can be useful at times, just mostly for when you're trying to get a feel of how this company that you're looking at has been progressing over the past 52 weeks. The dividend, so again, I mentioned dividend earlier. For those of you who are interested in dividend investing, so this is the area you'll want to spend some time just to understand if they have. So they have paid dividends historically. So their trailing annual dividend yield is 1.64%. Their forward annual dividend yield is 1.74%. So there's a key difference that you might want to pay attention to between these two. But forward looking, trailing, backward looking. They give the last dividend date. They give you the next expected dividend date as well as the ex-dividend date. Alright, so if you take a look at the profile, so Yahoo Finance has made it as easy as possible for you to understand where the company is registered, if they have the key executives, roughly where it's located, what the business does, and some corporate governance. Some people might want to pay attention to that to see and understand those factors that can affect Starbucks' operation. So that's why they really talk about Starbucks, and they give a quality score index on that one. So it might be important to some people to understand things like that. So key executives. Reason why you might want to know and understand this. I've said in videos before that I personally believe that management should be part of your reasoning for purchasing companies, especially when they haven't established themselves. You want to see where management's at, so you might want to find interviews of them on YouTube or whatever material you can, if you do have that kind of time on your hands, because you're buying and holding these companies. You might not have a lot of money, so we need to make sure we can squeeze the right amount out of every penny that we have. So the way I put it is, I can see in my head, I can see my money out there working hard for me every single day, day in and day out, sweating, working. That's how I see it. Anyways, you want to make sure, in order to get that kind of quality, you're doing your homework. Don't just go off the whim and buy into companies just because someone has told you that. Look at the company. So they give you more analysis on their financials, and if you don't understand financials, it doesn't matter too much in the short term because you can learn as you go along. So when I did do an accounting course when I was at high school or secondary school, but I really have forgotten a lot of the things, and I had to relearn as I went along. So what you might want to pay attention to here are two metrics. You want to understand the profits as a rough measure. You want to know about a little bit about their income. The amount of tax they pay might not be as important, but it might be something you do want to pay attention to. I can't tell you what you want to know, so I'm just giving you rough. Find out their total revenue. Find out their cost of revenue, because that's something to pay attention to. How much is the business spending in order to get that return back? You can take a look at their balance sheet as well, and I personally love looking at the balance sheet because I want to know the amount of cash that these companies have versus or their assets versus their liabilities, and these are broken down into long-term and short-term liabilities as well. So do find out what those things really mean. Do your homework. Can't reiterate that much. So the Yahoo Finance has provided a summary for the past 4 years, so from 2017 up to 2020 on this one. If you want to look into their cash flow and find out where their money's being spent, if they're managing their finances as best as they can. Some people get really good at reading things like this, but for me, not really an important factor, as in not the most important factor, because I want to know for these growth companies that I buy personally is what value are they offering to their customers. Like Amazon and Apple, they've perfected that model. Okay, so that's basically what I wanted to show you as a brief. So I'll go ahead and find Apple and just quickly show you. So their ticker symbol, again, you can see multiple results come back. And again, we can see, let's just click into the first one. AAPL is the ticker symbol. I personally own Apple, so I am aware of their ticker symbol. So it's on the NASDAQ as well. Their price is quoted in real time, and the currency is the US dollar. Current price for Apple shares $129.87. Again, you've been provided a summary by Yahoo Finance just to give you some quick overview. Apple is now worth, for the market cap, it's $2.18 trillion. Statistics is what I want to find out. So it has a market cap of 2.18 trillion, enterprise value of 2.22 trillion. And I personally see Apple in the future, say within the next 5 years or so, 5 years or more, becoming a $3 trillion company. So personally, from my point of view, I would be buying more shares in Apple over the next coming 5 years. So you should have a figure in mind roughly, as you get more experience, you start to realize how these companies operate, and you start projecting your own expectations onto these companies. That might be a good or bad thing, but I think you should at least have an idea of where you see the companies going in the future. Their profit margin, if you look at that, that's a whopping 21.74%. Return on assets, so they're quite good, 13.36%. Their return on equity is 82.09%. So if you look at that figure, Apple seems to be very efficient and effective at managing their resources. So their revenue is $294 billion US dollars. Quarterly revenue growth, again, that might be something you would want to pay attention to, because it means that Apple is growing. It's expected to grow into the future at a similar rate, and they seem to be doing well. Their earnings has been growing over the past few years, hence the value the valuation on the business. They have 76.83 billion in cash and 112 billion in debt. So when you look at that figure anyway, and you look at a company like Apple that is receiving a revenue of 294 billion and they have a profitability of 21%. And you think, okay, why doesn't Apple pay off more of its debt? And this comes down to how effective companies are at managing their debt. So if you think about individuals and how we manage our own debts, even though you might have the money up front to pay off for those debts, it might be better to you to hold on to some of that cash when you need it and manage your debt according to the amount of cash you have. Okay? So that means you can efficiently use the cash if and when you need it, and at the same time maintaining a certain level of relationship with your creditors at the same time. So that's one of the reasons why these companies, you'll find they do have debt even though they can afford to pay them off. So looking at Apple's balance sheet, it's looking quite healthy. I wouldn't be too worried about my investment in the short term. Hence the reason why I've chosen to invest in Apple for the long term. On the sustainability side, it does break down the environmental, social and governance risk rating, and they do give you a metric. So that might be something that you would want to look into to see how much of a risk this company would be to you if you're invested in it. So currently it's low risk, so you don't have to worry too much. There's a significant controversy level, and I'm sure you can probably assume why that might be. So some of the issues around their relationship with the companies who sell or offer applications on their app store, they do have a bit of a rough relationship with them at the moment. I won't get too much into that because that's not what this video is about. So I do want to share quickly how you can find out more information about these companies. So let's go to Apple and just let's do Apple Investor Relation. Just as a quick search, and the first thing on the list, you'll see it there. It usually has a URL similar to this one, so we'll go straight into it. And this gives you all the news and results you need about this company. So this is even more reliable than the information you'd get on Yahoo Finance, because there's no information better than getting it from the source or from the horse's mouth. Okay, so it calls out all the information here, and there are tons and tons of material. So just as a quick check, they give you their report on the first quarter results, and you can read into that information. Okay, won't get into that. They give you all the information, all their latest news. Really good to read. And they give you the historical data as well. And you can see all their filings, the SEC filings, their 10K filings, all that stuff, the additional reports. Very important to get a feel of some of that. So leadership and governance, again, I've spoken about that before, and it gives you a breakdown on management. And I think if you click into it, when you click into it, it gives you a summary of their history and what background they come from. So that might be really important to some people to try and get a feel for who's on the management team and who's on their board of directors as well. And that information is really, really useful. I cannot emphasize how useful having all this information is as an investor. Because when I first started, I did not understand how all of this information would give me value. But as I gained more experience over time, it started becoming very obvious to me as to why I would want to know this much information. And again, it just goes back to what type of investor you are. You need to understand yourself, basically, because no one else can understand you better than you can understand yourself. because you know what's going on in that brain day in and day out and what causes you to tick. As a quick summary, I did a walkthrough in Yahoo Finance of how you can actually find a company, and making sure that you find the right company as well, and that you have the right ticker symbol, because this will translate when you need to go over to your investing platform and find the same company that you've done the research on. They have a short code called the ticker symbol. That's very important to identify that company. So it's that company's unique identification code for you to be able to find it regardless to what platform you're using. It can vary depending on which market they're offering the stock on. There's some complications as well, which I won't get into, about these different markets and how they operate. You need to find out that information. So I did a walkthrough in Yahoo Finance. I did a quick one for Starbucks, a quick one for Apple, and then I took you to Apple's investor relations page, where you can find more information about these companies. So whenever you find a company that you really decide that you want to invest in, you've done your checks and balances in Yahoo Finance, you've moved over to doing more research, you can quickly type in the search engine X company investor relation, and that usually takes you to the investor relation page. So for Starbucks, I'd type in Starbucks investor relations, and it just quickly gets me there, and I can get more information as and when I need. Hope you guys found this useful today. I'm really excited about the information that I'm giving to you, because this is information I wish I knew and understand when I first started investing. So again, this is not me telling you what companies to buy, but rather giving you real examples and showing you exactly how I would find just enough information to get me started in understanding these companies. And once you choose those companies, it's important to remember the research you've done, and that helps to keep you balanced and not in the frame of mind of panic selling something because someone else has told you something. You've done your research, that research was solid, and you formulated something in your mind that has caused you to want to buy that company. And that should go along with all the other information you've gathered that I've given to you in the previous part 1 video. So it's just a collection of bringing all that information together into one and using that. Thanks for watching again. Peace out.